BMO says Canadian real estate is in for an enormous shock, as we've seen the sharpest tightening of housing conditions in a generation. So in today's video, we'll go over that article together and I'll give you my thoughts. But before we do that, please leave me a comment below and let me know, what do you think the future holds for the Canadian real estate market? My name is Jessie McLellan and I'm a realtor here in Oshawa, Ontario. If you would like to stay up to date on the real estate market, especially what's going on in the GTA and Durham region, then please subscribe to our channel. And if you enjoy this video, I would appreciate if you would give it a thumbs up because it does help us reach more people like you. I wanted to talk about an article that came out a couple days ago from BetterDwelling that went over some predictions that BMO had for the future of Canadian real estate. I'll post the link to the article in the description and go over some of my thoughts on the key details. As many of you know, the Bank of Canada has been increasing their rate in order to help fight inflation. When this rate goes up, it increases mortgage rates and ultimately decreases the amount of money that a given buyer looking for financing will receive. Though there are many factors that come into play when getting your mortgage pre-approval, like amount you have down, creditworthiness, income, all that stuff. With that in mind as a little bit of context, I'm going to pull up the article that I wanted to go over with you. The Canadian real estate markets just experienced a shock, but another is on the way. BMO recently told investors they expect mortgage pre-approvals are propping up markets. Much of today's home sales fail to reflect current mortgage rates since many secured their interest costs months ago. The erosion in buying power will deliver another shock in the coming months, warned the bank. While I'm not disagreeing with what they're saying, I think it's important to consider that the true shock may actually come in 2 or 3 years' time when people who have taken a 5-year fixed rate are going through life changes and have to move and end up breaking their mortgages. Because most people don't actually last in the same house until the end of their term. Many buyers who purchased at inflated prices during the peak of the market locked in their lower interest rates. But situations change and people end up having to move, and it doesn't always end up lining up with the end of the term. So when those people break their mortgage in 2 to 3 years' time, I think we could see another shock. And buyers who purchased homes at lower interest rates for higher prices and had a variable rate or a really short term are already being impacted by the interest rate increases. Some with variable rates and fixed payments, unfortunately, are even finding themselves hitting their trigger rates, meaning that the interest portion of their payment has increased so much so that if they were to continue making the same payments, they would only be paying the interest on the loan and nothing would be going towards the principal. So those who either see a large increase in their monthly payment or those who are hitting their trigger rate or close to hitting their trigger rate might be more inclined to sell or feel pressured to sell in the future. Now, while I agree with that and understand what they're saying, I do not think that in 90 or 120 days we'll see some massive shock to the market. Each pre-approval and lender is different. Some buyers have their pre-approvals for 90 to 120 days and they have to purchase within that time frame, and some have it where they have to purchase and close on the property within that time frame in order to get the rate that they locked in. And while there is this buffer after each rate increase, there is definitely an immediate mindset shift in buyers, at least in my experience. At this precise moment, it's a bit of a unique situation where many potential buyers have pre-approvals in hand from before the big wave of Bank of Canada tightening, while also looking at 10% to 20% discounts on home prices. If you can buy at a discount with a mortgage rate that no longer exists, it could be enticing. Well, of course it should be enticing, right? I mean, I'm not sure exactly what the negative was there. You don't just get pre-approved because you thought it would be great fun one Sunday. Usually if people are getting those pre-approvals, it's because they've had a life-changing event or it's become time for them to seriously consider moving. So I would hope if you've decided now is the time, you need to purchase a home and you have a pre-approval at a lower rate than what's offered right now, that you would take advantage of the impact that the recent rate increases have had on prices. With that being said, prices could continue to go down and waiting could prove to save you money. But there's also a possibility that an interest rate increase happens in October and then maybe again in January, and that the prices don't decrease enough to make up for the interest rate increases at that time. There's potential upside and risks to both options, and none of us have a crystal ball and can predict the future. My best advice is speak to a mortgage broker, speak to a real estate agent, a financial planner, and any other professional that you need to consult to help you weigh your options and figure out the right option for you. Current buyers don't fully reflect the impact of financing on liquidity. As a result, BMO told investors they expect a further shock, using Ontario to illustrate its point. The bigger picture is that there is still an enormous interest rate shock to absorb from an affordability perspective. True. The 1-year increase in carrying cost on an average home purchase in Ontario has only been rivaled in the late 1980s. The point might be crystal clear to the industry, however, he clarifies for the average person. In other words, this is the sharpest tightening of housing conditions in a generation, and it will come with further adjustment. So yeah, I agree with what they are saying, but I'm finding lately that so many articles and media outlets are throwing around just like the late 1980s, and it really just freaks people out. Just as a disclaimer, what's true for the area that I service might not be the same for different parts of Canada or even more rural Ontario or places with lower population densities. Though I'm certainly not a mortgage broker or an economist, what I can offer are insights that I have gained through working actively with buyers and sellers in this changing market in Durham region. And I can tell you absolutely, buying a home at a discount with a lower mortgage rate appeals to buyers, especially when you consider the climate that we just came out of, where sellers held all the power. And there could be a delay in the prices of houses dropping due to the pre-approvals allowing buyers to essentially shop with more money. But right now, over the past few weeks, we've seen an increase in the number of multiple offers again, which tells us that there are still tons of buyers that are wanting to buy homes. Be sure to subscribe to the channel because I will be posting a video explaining interest rates and what you need to know, not only about the rate increases, but what it could mean to you if you're thinking about buying or selling a home. If you have any questions about the market, you can use the first link in the description to book a call with me at a time that works for you. Thank you so much for watching. I hope you found this video helpful. I'll see you in the next one. Bye.